pros and the cons of creative financing. The pros are pretty obvious. When you're doing creative financing, you don't need a lot of money down. So for those of you that have been waiting to buy or holding off on buying, maybe you're trying to save up and put some reserves in the bank so you have a down payment. You don't need down payments when you're doing creative financing. And even if you do, it's a fraction of what you would need if you were buying that property using bank financing. Also the pros, more flexibility in the deal structuring, okay? Your banker does not understand creative financing. They understand one way of financing. What's your credit score? Is it 720 or better? Do you have at least 10% to put down? Do you have gainful employment that you've been there at least 2 years with 2 years of tax returns that you can show that you can support to make the monthly payment? And does your debt to income ratio fall below 47%? That's what your banker knows, okay? So if you're trying to accomplish anything outside of those terms, you are now in the land of creative financing, which is a very fun and exciting place because there's really no rules outside of the deal that you negotiate with the seller, okay? Now, where can we utilize creative financing? Creative financing is any deal, anywhere, anytime, any place that a bank would normally say no to. In fact, when you call our corporate office and you ask to speak with somebody from COGO Capital and they put you on hold, you're going to hear hold music with a song, a jingle that says, when banks say no, call COGO, because that's what we do. We do all of the deals that banks won't do because they don't understand the terms, they don't understand the structure. So if you have been wanting to start investing in real estate, if you've been wanting to get started buying, fixing, and selling, if you've been looking for win-win strategies that you can utilize for both buyers and sellers, creative financing, private money, COGO Capital is the way that you're going to get that done. Now, let's talk about some of the cons when you're dealing with creative financing. Creative financing is going to require you to have some negotiation skills and some basic knowledge about real estate in general. Now, as I mentioned before, we are a nationwide educator on creative financing and real estate investment strategies. And right now, you can go to fundingtour.com. Just go to fundingtour.com. And every Wednesday and every Saturday, we put on a 6-hour free training on how you can get started investing in real estate without having any cash, regardless of your credit score, regardless of your background, regardless of your experience. If you just got out of jail 3 days ago, you can start right now buying, selling real estate, regardless of any of that stuff, okay? So you do need to invest some time educating yourself on how to find these deals and where these deals are located, okay? Now, some of the methods, we talked about subject to financing or lease with options. These all have their own little nuanced risk. So I would really discourage you guys from taking anything that you've seen, anything that I've said as the gospel and going out and implementing immediately without checking with your local attorney, your local title company, your local real estate attorney. All of these things should be checked, tested, reviewed, questioned, because you want to make sure that you're structuring it correctly for your area of town. Now, most of your real estate laws are established at the state level, but every county has their own nuances around the legal and some subdivisions. If you're dealing with a planned unit development or a PUD, or you're dealing with an HOA, a housing authority, where you're going to have to make monthly payments to some group to police when people's trash cans are out there, okay? Those have to be considered as well when you're doing these types of creative strategies. And the last one that you definitely need to check, especially if you are going to be using some of these creative strategies to start doing short-term rentals like Airbnbs. A lot of communities now have outlawed Airbnbs, especially in HOA areas as well as PUD areas. So make sure you check with your local laws before you get yourself too far into any of these deals. But lastly, I want to manage your expectations, okay? not every seller, not every transaction, not every deal is going to fit into creative financing, okay? Again, creative financing, you need to find a motivated seller who's willing to work with you because they maybe don't want a lump sum of cash, or the property doesn't qualify for all cash, or the bank won't lend on the home because of its condition to get them all cash, or because the seller is just looking to get some monthly income. They don't want $400,000 laid in their lap. They want $1,200 a month to help subsidize what they're not getting in Social Security or Medicare or Medicaid, and they need that extra income to cover their bills on a monthly basis. All of these different strategies are why creative financing is so effective, but it's not going to work every time. Just be aware of that.